After all, that's what the government can do, isn't it? And therefore, to decode what we can realistically expect, we're joined by two stalwarts, Dinesh Kanabar of Dhruva Advisors and Sunil Badala of KPMG. Gentlemen, good morning and thank you very much for joining us on a Sunday and for your patience. Mr. Kanabar, what's your expectation list?
Couple of things. You rightly mentioned that what is it that the government can do having regard to wherever we are today. So you look at things. We want manufacture in India. I'm seeing the notes about Anand Goenka, for example, talking about how do we have a manufacturing push. Then we have global tailwinds, headwinds, whichever way you look at it, where people who have studied in USA might not be able to get an H-1B visa and might want to come back to the country. And then you are saying that India wants to make its mark, whether it is in the manufacture of semiconductor, whether it is in artificial intelligence. How will we achieve all of this? How do we connect these dots? And two things come in. One is that we need extremely more investment in research and development. That's what's going to keep us ahead. And Lata, whether we agree or not, the Indian corporate spend on R&D is a minuscule of global corporate spend on R&D. And we need to up it. And can the government do something which will allow that investment to happen? Remember that not all R&D is successful. It's a patience game. It's a deep pocket game. And if the government can incentivize this, and Lata, I had an occasion to discuss this with government at great length. And two responses come back. One is, give a proof that if we give this incentive, people will spend more. And second, there are people who abuse it. That cannot be the basis on which you get law. If there are people assuming you need to have guardrails to protect it. But I do hope and wish that the government does give a boost to R&D and thereby give a boost to local manufacture. That's one very important thing. The second important thing, Lata, which I'm looking to and I'm reasonably certain that this will happen, is amendments to customs regulation. This has been one area where digitization seems to have given a go-by. Huge amount of paperwork, backlog, litigation. It's estimated that about 1,52,000 lakh crores are stuck in customs litigation. And there's a huge backlog out. Can we come back? Can we first of all rationalize our rates? We have 8 rates. Can we sort of put it into a better form? Can we just have 4 rates like we did for GST? Can we do a Vivad se Vishwas sort of a thing under customs? Get a lot of money released. I think that's very, very important, very critical. And actually, I'm reasonably hopeful and expecting that that's what's going to happen this time.
Yeah, and absolutely. And I think very, very important points, Mr. Kanabar, that you made. Sunil, if I can come to you, your sort of, top 2-3 expectations about where you feel there is a real likelihood of something will happen.
Okay, so I think, obviously I entirely agree with what Mr. Kanabar mentioned. Incrementally, I would say that I think the market is expecting a few tweaks in the capital gains tax regime, as well as in the bond market and in the mutual fund. So let me just quickly touch upon all three. I think there is a concern about, STT and the increased long-term and short-term tax rates which were proposed in last year's budget. And there is definitely a rationale to kind of, reduce or eliminate STT or, capital gains tax rate as the case may be. But having said that, of course, I'm conscious of the fact that the government needs to have the fiscal room to actually do that. And I personally think that if government can find the ways, and I'm sure there are ways in which you can collect more revenue, then I think this is a good thing to do. It will boost the overall sentiments of the market. We have been seeing a lot of stress on the FDI investment. Also, we've seen FPIs pulling out the money consistently for last year or so. I think if you focus on some of these aspects, it will be good. The other thing I think we should look at is the bond market. Yeah.
Right, Sunil. Sorry. Let's just take it, and I'll come to you on the bond market because you have a sort of idea in terms of what should happen there as well. But Mr. Kanabar is with us as well. Mr. Kanabar, you heard Sunil, right? You're smiling, so I think you're all of us would be happy if these taxes are brought down, but it's about what we want and what perhaps is possible in that sense. So what's your sense on this point, equity taxation?
So I think actually a slightly different point of view, if I could just tell you. There has been this whole going back and forth on tax treaty interpretation. And very recently, we had a Supreme Court judgment in the case of Tiger Global, where the two earlier Supreme Court judgments, which was in the Azadi Bachao and Vodafone, have been, so to say, overturned, where the Supreme Court has come back to say, under what circumstances should tax treaty benefits be given? And speaking to the venture capital, the private equity industry, there is a huge amount of concern that what seemed to be a settled situation has suddenly become unsettled.
Okay.
And I know for a fact that the government is concerned about this development. And I'm hoping to see that what sort of a certainty can the finance minister provide with regard to that. I think to expect a reduction in the rate of tax, of course, it's a utopia. It's something which we all the time always want. We want a reduction of STT, and we want capital gains tax to go away, and we want no taxation on bonds and all of that. But all of that really does not fit within the fiscal framework. There is a merit, of course, to the point which Sunil made about parity in taxation between equity and debt. But leaving that aside, the way I would put it is that government needs to give more certainty rather than look at reduction of rate of tax. That certainty is critical, and believe me, it will give a lot of impetus to the market.
Absolutely. Sunil, that bond market point, quickly, 30 seconds. Just quickly.
No, so bond market point is very simple. I think on the listed bonds, we obviously know there's a parity between listed bonds and the equity. It's only about unlisted bonds, I think, that we're talking about, that they need to be brought at par with the listed bonds.
Fair enough. Actually, even debt indexation for mutual funds was taken away, and that's been a negative too. I take your point on debt. But gentlemen, do stay on. We have to go across to Shireen, who